Welcome to TheoTrade. This is Don Kaufman. It's January 28th, 2019, and you are watching the TheoTrade Evening Update. S&Ps right now are off by the tune of about 1%, with just over 15 minutes left in the trading day. Nasdaq off by about 1.4%, being led lower predominantly by a pre-market announcement from NVDA. If you missed that one, NVDA, well, they guided substantially lower, taking most major technology stocks right along with it. And not a moment too soon because, of course, big technology is kicking off earnings this week. Of course, Apple is going to be Tuesday after the bell, followed by a slew of major tech companies later this week, and the likes of Microsoft and Amazon. Oh, it's going to get exciting. But let's put all of that aside for just a moment. Today, again, S&Ps are down by the tune of about 1%. But I got to tell you, for a 1% move down in the marketplace, I mean, look at that volume there. That's what we call lackluster volume to the downside. 1.2 million contracts ain't exactly getting it done. And I know that we have 15 minutes left in a trading day. Nevertheless, when you see some decent down days, okay, does this volume really stand out to you over here? Okay, it's not exactly inspiring to see 1.2 million contracts trading on a day where, again, the S&Ps are off by the tune of about 1%. I would believe that the volume is not spiking because, again, we're drifting listlessly lower. Why? The market's in an absolute crossroads this week. For just a moment, put earnings aside. We all recognize earnings are going to come out, but earnings, every single time the earnings come out, they're a bit of a coin flip, right? We're going to have some positive earnings. We're going to have some negative earnings. We're going to laugh. We're going to cry. We'll put that aside for a second. You've got Brexit. You've got FOMC. You've got trade wars. You've got the employment situation at the end of the week. It gets even better. You've actually got data coming out at some point this week, which haven't been announced yet because of the government shutdown. Okay, there are many data points that have yet to be dropped. Why? Because they were delayed. It looks like you may get some of that data late this week, maybe right at the exact same time as the employment situation. Pick your evil this week. This is a week of binary trade after binary trade. And if you've never heard that terminology, of like, what's a binary trade? It's your 0 or a 1. Effectively, what it means is you got a lot of 50-50 decisions that are going to be placed on there. Let me take you through kind of a few of them and what I think is really in play and what isn't so much in play. Let's start, okay, and we'll come back to Apple earnings here in just a moment because we're actually going to give you some trade ideas for Apple earnings. But let's start with what I call, again, a market at a crossroads, Brexit, okay? What do we actually think is going to happen in Brexit this week? Absolutely nothing. Kick that can right down the road. Effectively, with Brexit, if you asked me this last week, it was looking like another referendum would be coming. That is a vote to the public. And, once again, that doesn't look nearly as likely as it did probably as last week. Okay. But it does look like they're going to have a little bit of a push in the timeline of the possibility of Brexit. Now, again, we're supposed to find out a lot this week, but right now, kind of turns out that it looks like we're just going to find out when the next vote happens to be. So my expectations of Brexit, wouldn't worry too much about it. Let's just kick the can down the road. Let's actually move over. We're going to jump over the FOMC because that's the big tamale, right? So let's cruise over to the trade wars. Trade war, China, they're in town, getting a little bit of climatized as they're in town about 2 days early prior to the meetings. So this is not necessarily a low-level meeting. I mean, we've got all the right players in the room, okay? What's the outcome of the Chinese meeting going to be? Nothing per se is going to get solved. All they're going to do at the end of the week is say, we've made progress. Listen, there's no other alternative other than for them to come out and say, we've made progress. Great. That was the exact same thing that happened, a couple of months back. And they did the exact same thing. We've made progress. Again, this is another one where they may make some progress. Whether they make it or not, you never know. Peter Navarro's in that room. things get a little heated, a little bit crazy in there. Nevertheless, again, I wouldn't worry a tremendous amount about the trade war. Similar to Brexit, this is a thing that's going to just get kicked down the road once again. Now, let's come to the FOMC. The FOMC, yeah, that one's big. That one is definitely big. And for this, we're actually going to cruise over to the SPX for just a moment. Why am I looking at the FOMC as being so big? It's all about the balance sheet. Okay, it's all about the balance sheet. First of all, rates, they're not going to raise rates. Okay, they've got a stay of execution on the rates. They're not going to influence the interest rates this time around. However, one thing you have to be fully aware of, okay, is that Jerome Powell has a conference after the FOMC announcement on Wednesday. Because he has that conference, all right, it's very likely that he explains, let's say, some change, if you will, at that point in time to what they're doing with the balance sheet. The contraction of the balance sheet, to me, that's everything. I don't care if they continue to raise rates. They could even lower rates. It's the contraction of the balance sheet, okay, that would really have a longer duration effect, not only on interest rates, but on the equity markets as a whole. And at this point in time, I'll tell you, I'm looking at the January 30th expiration, okay? There's still upwards of a $31 move priced in here. But what's interesting, there's also a Thursday expiration this week because it's an end of month expiration. Okay, and there's a Friday expiration. And take a look, the Thursday expiration actually holds a little extra volatility. So we still have about a $40 move. Now, I still think that that's inordinately low given the fact that, again, if Jerome Powell, okay, really kind of messes with the balance sheet and the runoff, okay, of that balance sheet, that is going to get markets absolutely a-rockin' out there. Now, again, the thought is here that the balance sheet as being tapered down, okay? So right now we're right around, okay, 4 trillion. Okay, what do? They just allow the balance sheet to kind of run off over time. They can actually slow this, okay? If they do slow it initially, the market's probably going to react wildly positive, okay? But over the duration, I think we may actually get a whipsaw activity where the marketplace takes off to the upside and then reverses. Could be a huge opportunity into Wednesday and Thursday. Why do we look for that market to possibly reverse on that? Because initially the market's going to be like, yeah, this is what we wanted, more juice, okay? We're hooked on the Fed, right? We're hooked on the Fed. That's low interest rates. But it's not so much being hooked on the Fed as eventually the marketplace is going to realize, wow, they're going to slow down the tapering of that balance sheet. Things must be really bad. So we might get knee-jerk reactions throughout the course of this week. Again, this is my interpretation of it. The Fed is the really big tamale in terms of this marketplace being at a crossroads. Now, let's come down a bit to earnings. By the way, speaking of the Fed, I'll back up for just a second here before we jump to the earnings. You'll note that the ZB doing absolutely nothing today. It is curiously unchanged, both the ZB and the ZN. The bonds completely pausing. I think they're seeing the exact same thing. Traders, they don't know exactly what to do or how to position themselves in a week like this with, again, so many different binary events that are really unfolding. Now, earnings. Let's just take a moment. Let's look at Apple. Why are we looking at Apple? Well, if you take a look at Apple right here, right now, obviously earnings coming out Tuesday after the bell. Just be forewarned that Apple doesn't report directly 2 seconds after the ding ding of the bell, that it takes a little bit of time before Apple does report. They're special, I tell you, which is fine. The kind of positioning I'm looking for here, without even going into discussion of implied volatility, listen, Apple has guided lower. It has been downgraded time and again, okay? At this point in time, and can't believe I'm going to say this, I'm actually looking to substantiate a bullish position coming in to the earnings announcement. Now, I'm going to be placing the bullish position effectively, okay, tomorrow, probably the last hour or two of the trading session, because I want to give myself the most effective bullish position at that moment in time. Apple is down about $2 today, tune of about 1.2%. Again, the entire marketplace has rallied back substantially from the December lows. Apple, pretty much just riding the bottom of the barrel. I think it's worth, again, the upside shot in this particular case, especially for me. And I want to make this very clear. If Apple comes out and does beat their numbers, they've already projected lower. If they beat their numbers, stock will fly higher. The marketplace will likely fly higher. Okay? I have a lot of bearish positions on right now. I look at getting bullish on Apple as a pure win-win for me. And now this is exactly how, as traders, you want to mature and you want to start thinking this way. This isn't just a pure like, hey, Don's getting bullish. Okay? This is, I'm taking a bullish shot in Apple. Because if Apple does come out and has decent numbers and the stock pops, it takes the S&Ps higher, which is actually going to hurt my positions. As I said, this is a win-win. So if Apple moves up, what do? I make money on Apple. If Apple actually turns around, misses, guides lower, the stock tanks, great. I'll lose capital on the Apple trade, but the rest of my portfolio will probably live to tell the story, a very happy story of a marketplace that tanks. Again, it's a win-win position for me to take a bullish stance right now in terms of Apple. And it could be for you too, if you've got a number of bearish positions on. Is Apple implied volatility up? Well, effectively, this particular earnings period, given the fact that where we're seeing right now the implied volatility and the expected move, it's about an $8.50 move, okay, divided into what, $155 stock. It's about a 5%, 5.5% move kind of being priced in. The last earnings period, which was November, had about a 4.5% move being priced in. So again, Apple does have some additional for some additional, implied volatility being packed in. What kind of position am I going to take in here? I'm just going to use a very binary type trade. However many contracts you want to do, it's expecting, again, about an $8.50 move. When I say a binary type trade, this is a trade where I'm probably just going to use an in-out spread. Okay, I'm not going to overpay for this thing. I'll probably pay in the neighborhood of about $1.25 for a 250 wide spread. I could even get a little crazy. I could even go as wide as doing a $5 wide spread. Why would I consider, one versus the other? Let's make sure we get the right $5 wide spread. Why would I consider one versus the other? Has to do with positioning of Apple or how many contracts I'm effectively going to trade. If I do a $5 wide spread, I can do half the number of contracts as if I did a $2.50 wide spread. Again, for exact positioning in this spread, tune in live tomorrow to TheoTrade. I will give you all the little nuances to be able to place this particular trade and many more in terms of Apple. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.